Well, good morning, Jaginder Rana here. The topic for the discussion today is health insurance surpassed motor insurance business. Health insurance surpassed motor insurance business. The health insurance share in the non-life segment is set to surpass other categories put together as the sector continues to expand. At present, health is the largest segment with a 40% share of total non-life premium. Health insurance industry is growing at 14 to 15% with significant potential for further expansion, and the companies is excited about the budget move to allow 100% foreign direct investments. Insurance companies are excited. So unlike motor insurance, the second largest segment, which depends on new vehicle sales, health insurance has vast scope due to its low penetration. Globally, 5 of the top insurers by market capitalization operates in health insurance. Insurance regulator IRDAI's decision to allow a 10% hike in senior citizen premium can be implemented while maintaining a combined ratio of 95%. So the combined ratio represents the proportion of claims and management expenses to total premiums. The total premium income of the non-life industry was 2,89,673 crore in financial year 2024. So health insurance in India remains affordable. A family can secure coverage for around 2% of the sum insured, which is reasonable. Insurers are leveraging technology to scale operations without increasing fixed costs. Most of the employees are digitally onboarded with automated underwriting, and retail claims are automatically approved. Insurers have different structures compared to other insurers. Health insurers, standalone health insurers have different structures compared to other insurers. As a private company limited by guarantee that doesn't distribute dividends but reinvest profits. Even though the penetration of health insurance in India is growing at a rather slow pace, with a staggering health protection gap of 73%, it has clinched the largest market share at 40%, outpacing motor insurance, which stands at 29.3%. Despite being a legal requirement for all vehicles, even though the penetration of health insurance in India is growing at a rather slow pace, with a staggering health protection gap of 73%, it has clinched the largest market share at 40%. So a critical issue for motor insurance is the high percentage of uninsured vehicle because of non-compliance with mandatory insurance laws. Around 54% of vehicles are still uninsured. Vehicle owners often fail to either purchase insurance initially or renew it annually. Moreover, the sector's growth is closely tied to new vehicle sales, which can be volatile. For instance, December 2024 saw a dramatic decline in retail vehicle sales by over 45%, dropping from 32 lakh 8,719 units in November to just 17,56,419 as reported by the Federation of Automobile Dealers Association. This decline was despite aggressive discounting efforts, with a year-on-year decrease of 12.49% from December 2023. So January 2025, however, showed a slight recovery with 6.6% increase in sales. A major shift came in the mindset of people when a lot of families lost entire life savings while fighting against COVID. So the importance of health insurance was finally realized, and this gave a rise to health insurance purchase. Out of the total motor premiums, 60% of third-party premiums, and as there has been no rise in these premiums by the regulator, the growth seems muted. So on the other hand, health insurance trajectory is supported by the fact that around 75% of Indians still pay for medical services out of pocket, highlighting the sector's low penetration and growth potential. Moreover, unlike motor insurance where premiums decrease due to vehicle depreciation, health insurance premium inflates with age, ensuring consistent revenue streams from renewals. So industry leaders, including the CEOs, have predicted a continued expansion at a rate of 14%. Union Health Minister informed the Lok Sabha that a total of 8.59 crore hospital admissions worth rupees 1.19 lakh crore have been authorized under the Ayushman Bharat Pradhan Mantri Jan Arogya Yojana. He said that 5.63 crore vulnerable individuals have been screened and 1.59 lakh new tuberculosis patients notified since the launch of the 100-day intensified TB elimination campaign in 348 districts in December last year. Underlining that steps are taken for prevention and detection of different kinds of fraud in the implementation of the Ayushman Bharat scheme. Suitable actions including de-empanelment of 1,114 hospitals, levying penalty worth rupees 122 crore on 1,504 errant hospitals and suspensions of 549 hospitals have been taken against fraudulent entities. In a written response to a question in Lok Sabha, he said that National Anti-Fraud Unit has been established at the National Health Authority and works in close coordination with the state anti-fraud units to investigate and take joint action against issues related to fraud and abuse. Further, any claims be empaneled hospitals found to be suspicious by NAFU. NAFU means National Anti-Fraud Unit, are withheld until proper scrutiny by SAFU, that is State Anti-Fraud Units, including field verifications where necessary. So as on February, 9 doctors and 71 hospitals have been suspended under the scheme. In Gujarat, additionally 2 hospitals have been de-empaneled and 1 hospital has been blacklisted. So a total recovery of 15.08 crore has been made, while penalties rounding amounting to rupees 19.90 crore have been imposed. So the ABPMJY is a flagship scheme of the government which provides health cover of rupees 5 lakh per family per year for secondary and tertiary care hospitalization to approximately 55 crore beneficiaries, corresponding to 12.37 crore families constituting economically vulnerable bottom 40% of India's population. So recently the scheme has been extended to cover 6 crore senior citizens of age 70 years and above belonging to 4.5 crore families, irrespective of their socio-economic status under ABPMJY. As regards fight against TB, the minister said in a written response to a question that 4.94 lakh Niksha shivers have been held, while 86,748 new Niksha Mitras have been registered and 1.12 lakh food baskets dispersed to TBF patients and their family members. The government had on December 7 last year launched the intensified TB Mukt Bharat Abhiyan and identified 347 priority districts across 33 states and union territories, including 8 districts of Himachal Pradesh, to accelerate the endeavor to achieve sustainable development goals related to TB. Out of the total campaign districts, 38 are tribal, 27 are mining, and 46 are aspirational districts. The campaign follows a renewed approach to find missing TB cases, reduce TB deaths, and prevent new cases. To ensure equitable access, special outreach camps have been organized to screen vulnerable population, offer X-ray and nucleic acid amplification tests, either through mobile medical vans or by mobilizing them to the nearest health facility equipped with X-ray. All services related to TB have been decentralized to the level of Ayushman Arogya Mandir. Campaign-specific information, education and communication materials have been developed and disseminated to educate the public and raise awareness about symptoms, preventions and the importance of timely treatment for TB in the campaign states and union territories including Himachal Pradesh, Chhattisgarh and Madhya Pradesh. Health insurers are seeking clarity from the Insurance Regulatory and Development Authority of India on the implementation of its recent circular capping annual premium hike for senior citizens at 10%. So particularly how it applies to long-term policies and whether rates can be adjusted upon renewal. When a circular issued on January 30, the insurance regulator restricted all general and health insurers offering indemnity-based health insurance from increasing premiums for individuals aged 60 and above more than 10% in a single year, following complaints from policyholders, some of whom saw their premiums double within a year. Some insurers have assumed the cap applies to the last premium paid before the hike. However, insurers are uncertain whether they can impose a cumulative increase upon renewal after a multi-year policy term ends. We are going to ask the regulator to clarify whether for a senior citizen with a 3-year policy, insurers can increase premiums by more than 10% and the policy renewals in the 4th year, or if the cap will continue to apply year by year. IRDAI has cited financial vulnerability as a key reason for this restriction. The most vulnerable age group is a senior citizen with limited sources of income. They are the most impacted by a steep increase in health insurance premiums. This has been a regulatory concern for IRDAI. So other than the cap, the regulator has urged insurers to standardize pricing agreements with hospitals. It has also cracked down on the insurers repackaging existing products with minor tweaks to justify price increases along with the price hike cap. The new regulatory restrictions on product discontinuation without regulatory approval will benefit policyholders, particularly senior citizens. The insurers have long relied on withdrawing older policies and replacing them with slightly modified higher-priced version. Now with IRDAI mandating approval for withdrawals, that loophole is expected to close. So following the cap on premium hike, insurers will have to rethink their pricing strategies to account for additional costs such as immunotherapy, which has become a regulatory requirement despite being a preventive treatment rather than a critical necessity like surgery or chemotherapy. or chemotherapy. This is akin to a sudden mandate for helmet coverage in motor insurance, which would require insurers to rework the pricing. Thank you very much.